In less than 2 minutes, you're going to learn the only way any day trader should draw support and resistance lines. Last week, we talked about volume profiles, so this week, we're going to use those to draw the most accurate support and resistance lines. So let's get into it. Support and resistance is super easy to explain. Support is the floor, where buyers are strong and they come in and push the price up. Resistance is the ceiling, where sellers step in to push the price down. But what about all this stuff in the middle where you actually want to trade? So like these right here, we saw that this area was a massive resistance and this area was a good support. So how do you capitalize off of this? And how can you see this stuff before it happens? It's very simple. All you got to do is drop down to a lower time frame, like the 15-minute or the 5-minute. Again, last week I talked about volume profiles. So if you throw on volume profiles on this chart where price rejected down and price shot up, you can see that on the 15-minute time frame, this is the volume profile's value area high, where a lot of sellers are interested in selling. Now what you can do is dump it down to a lower time frame like the 5-minute, and you will get a clearer picture of which direction the price is going to go. Any strong rejections off of the POC, also known as the point of control, as well as a break and a retest of the value area high, is going to catapult price up to the next value area high on the higher time frames. The VAH and the VAL are like boundaries that control 70% of that day's volume. So all of the volume that you're seeing, a majority of it anyway, happens in that range. So how would you actually trade this on a day-to-day basis? You want to look at specific candle formations in these specific zones. So if you get a long bullish rejection wick off of the point of control, you can enter in a trade and target the top of the range, the value area high. If you see a strong rejection wick and then a subsequent bearish candle from the value area high, you can target lower at the point of control. These are your short-term support and resistance areas. So what I suggest is you stop drawing weak lines on your charts without actual volume behind it and start using this tool instead. If you missed last week's 2-Minute Tuesday episode on volume profiles, you can check it out right here. And if you want a specific concept explained to you in less than 2 minutes, let me know in the comment section down below. Thanks so much for watching, and we will see you in the next one.